The following is a presentation of TFNN.
We're going to go to Tom in Colorado, who has been good enough to hold. Tom, thanks for calling. Thanks for holding.
Good morning, Steve.
How are you?
Good. How are you?
I'm doing great. Good to hear your voice.
Yeah, you are Mr. Happy, I'll tell you.
I love it. I love it.
Hey, Steve, I've been listening to the station for over a few years now.
Yes.
And I'm a first-time caller to your show. And I'll tell you, I love the way you break down the charts and explain things, your patience with the callers, the way you articulate the Fibonacci's and what have you. I think you do a great job. You're a great addition to this news network.
Well, thank you very much. We really appreciate that. Really do.
Yeah.
I can change the world. I'll be the sunlight in your universe. You would think my love was really something good. Baby, if I could change the world.
Let's go to a Dave in Boston. Hey, Dave, what's happening?
Hey, real quick, Steve, I got to tell you, man, you saved me yesterday because I had covered my short positions when I saw that mini rally and then they tanked the market, and then I didn't know whether to reshort at the close, and then when I got your video update, you totally gave me a game plan, and boy, did it work out.
Oh, that's great.
Kudos.
That's great.
Kudos, man. You were right on that.
Thank you. Thank you.
And even after it came out last night, they reported that they had failed, and then the futures came down.
That's right.
And then they went up again. So,
That's
man,
right.
you were right on that.
Change the world. I would be the sunlight in your universe. You would think my love was really something good. Baby, if I could change the world. Baby, if I could change the world. Baby, if I could change the world.
Let's go to our first caller. Let's go to Susan in Boca Raton. Susan, thanks for calling.
I just have to say one thing. I just recently subscribed to your Mastering Probabilities.
Oh, thank you.
You have put so much time and effort in it, and it shows.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, Money Masters and Treasure Hunters. Welcome to the Trader's Edge Show. I'm your host, Steve Rhodes, and welcome, folks. It is Marvelous Monday, really Marvelous Monday around here at TFNN.com. We'll talk about that in just a moment. Hopefully you had a fantastic weekend out there. I know I did, folks. Now, I'm here to inspire you, folks, and lay the groundwork for how we lead an inspired life, folks, because it is all about leading an inspired life. Now, my personal outcome has become better each day, and I hope that that's the same for you. The way that I do it is I try to increase my skills. So let's go take a look at one of our tools, the tools of change, folks. And that's a great tool when it comes to these markets that we trade or we invest in. I used to say, I don't know if you ever said this before, but I used to say, I sure hope that things will change. Then I learned the only way, folks, that things are going to change is when I decide to change. It's not about the market. It's about you, folks. And what I want you to do is I want you to learn to embrace change. Most folks, they just simply back away from change. If you are trading or investing in these markets, you have to be willing to change because directions are always going to change. We're going to take a look at that today here. Don't say, folks, if I would, I could. Say, if I will, I can. Why? Because indecision, folks, that is what I call the thief of opportunity. So let's go take a look, see what these markets are doing here. Then we're going to talk about the change, the wonderful changes here at TFNN, and it all begins today, folks. Right now, just a quick look at the markets. You got the Dow futures off about 50 points or so. You've got the ES Mini trading out at 1346. That's what we have on my screen here if you are watching us on TigerTV. Now, if you're listening to us on the radio, thank you so much for doing that. You can always catch the archive of this show on Channel 9. Just go to TigerTV, and you'll see an option, for Channel 9. You'll see this show. Following this show, Tom and I, we're back together again today. He's back from vacation, and that's the Money Master Show. The archives of those are on Channel 10 as well. Now, if you take a look at the NASDAQ futures trading out at 2606, and the Russell 2000 futures down 3 points as well, out at 801. King dollar pulling back just slightly, just by a hair, down 9 ticks. You've got gold trading up $5 out at 1583. Silver up 26 cents out at 27.18. You've got the DAX trading off almost flat, trading down 6 points right now. Over in the UK, the FTSE down 25 points. Great Wimbledon. This was the weekend of the 30 and over crowd out there. So congratulations to Federer and to Serena Williams out there. Both of them winning the Wimbledon men's and singles championship out there. And then we've got the Nikkei traded down 1 3/10% last night. Closed down 123 points, almost really added session lows. You had the Shanghai down 54 points. That was down 2 3/10%. The Hang Seng off 1.8% out there. And so let's take a look at the markets. Let's take a look at, we talk about, or I certainly speak to you about understanding contractions and expansions. Mostly the always the Fibonacci numbers. When we take a look at contractions, we're looking at 382, 618, and 786. And expansion, what are we looking at? That's right, 1.272, 1.618. As the market, now what I have up on my screen here, folks, I've got the 30-minute ES Mini going back to the move off of the jobs report that came out. And the move down, folks, what you're going to see off of a couple of swing points here, and what I'm taking you to is to the 12:30 time frame yesterday, as you had the ES Mini moving down in the 1343.25 area. If you were measuring swing points, if you had this tool out here, what this was certainly showing you was off of the swing point back here at 5:30 in the morning on July 3rd. What do you see? You see a 1.618 expansion. If you go back a little bit further, going off the swing point at 11:30 on July 2nd, what you see is a 1.272 expansion. And coming together right at that stage there, folks, also coming off of the swing points out here, or really off of the gap up, not the gap up, but the strong session on at 11 o'clock on June 28th, folks, out there, what you'll see is a 0.786 retracement. So the bottom line is coming into that 12:30 hour, as the market was moving down, it was moving down fairly quickly, and you wanted to understand where were areas where you would find some good support, or in other cases where you find some good resistance. What you really want to understand is what's going on between expansions and contractions of swing points, because what it did was it stopped right there. Now, you had a little bit of time where it moved down into the 2:30 time frame, but it stopped in its place down at 1343.25. The expansions and contractions, Leonardo Fibonacci did his job, stopped it in its place, moved up a little bit. In fact, when it moved up, it actually gave a bullish engulfing candle out there on the 30-minute chart, and then went back and tested that area again at 2:30 on Friday afternoon. Then what happens? At the 2:30 to 3 o'clock, you get this bullish engulfing candle. You get a confirmation on the next candle. The market moves up a little bit higher. So what do we have going on today? Well, today, and if you want to be able to draw your line in the sand, folks, it becomes real easy. Really, really simple out there. Now, what we'll also find out here is if you take a look at the 30-minute chart, what was also occurring at the same time that this bearish engulfing pattern occurred, and that's why I teach you how to buy and sell the D point, which is a really great webinar out there, and you can still actually get that, folks. So for those of you that bought the Tiger dollars, if you're looking for a way to invest in yourself, this would be one way to do it, is to learn how to buy and sell the D point. Let the market do 75% of the work for you. You just have to focus on the other 25%. So the market, as it was also moving down into those areas where we saw the retracement and expansion numbers coming together, we were also doing a 1 to 1.272 A to B equals CD down. That's where the market, so as far as where the line is drawn in the sand, it's really simple, folks. Very, very simple out there. It's the low that was put in coming into the 2:30 time frame. That's on the 30-minute chart out there. That low, folks, is at 1342.25. You close below that on any 30-minute time frame. And what's that set up? That sets up the further cascading lower prices that we would see. And where would they go? I'm glad that you asked me that. One of the first things that you do, folks, is just simply go take a look at the most recent major intersection out there. That comes in at 2:30 in the afternoon on June 28th. Low out there, 1309.75. Just simply go from those lows up to the highs that were put in on the full moon. That was, it was after the full moon. It was July the 5th in the ES Mini. That was at 9:30 in the morning as you got up into, or as it got up into the 1347.75 price. So you close below anytime on the 30-minute chart here, below 1342.25. You're going to head down to 1332.92. That's the 0.618. But more likely, folks, what it will do is it will set up lower price. And when you take a look at lower price, all you want to be able to do is you want to be able to change right? It's all about change. When you're taking a look at chart patterns out there, when you're looking at charts, be willing to change, be willing to take new information. What it will set up, most likely, is a new A to B equals CD down. Where's that going to take you? That A point is going to be the high that we were talking about, coming in at, in fact, the exact high was, it looks like it's 7:30 out at the 1375 price point, that 7:30 in the morning on July the 5th. Your B point is going to be the area right now that we're talking about of being support. That's the 1342.25 level. Right now, your C point, not much of a retracement. It was the going into the close, the actual close at 4:15 on the futures out at 1352.50. A to B equals CD. Where's that going to take you to, folks? Going to take you right down into that point, 786 retracement, 1321. 1319, 1320, right in that range, right where you also had two real breakouts, if you will. You had wide price spread at the 11 o'clock time frame. As I mentioned earlier, you had that on June 28th. Not any volume right there, but the volume that was backing that up was coming into the close on June 28th at 4 p.m. That price point out there, 1324. So in that 1320-ish range, folks, that's where you would find your next area of support out there. That's assuming that the lows get taken out. 877-927-6648. That's our call number. So now let's go take a quick look at the daily charts out here on the futures contract. What I'm going to do is I'm going to punch up here the Dow futures. So you got the Dow futures right now trading out at 12,676. That's off 49 points. Now, a couple things that we can take a look at. Number one, we're taking a look at the downtrend line out here. So downtrend is different than a channel line. So if we're taking a look at a downtrend, what you're doing is you're just simply taking the high of the candle or the high of the bar, whichever it is that you might use on your charting application. The high that we're taking a look at goes back to the May 1st high out at 13,284. Now, the next real touch points on this, you can use the touch points of June 19th out there at 12,829. It comes pretty close to touching the next day. It's very close to actually touching May 3rd as well. So that's good enough for my work. Now, what we can see that the Dow did is that on June 29th, folks, what the Dow did was you had wide price spread, you had some accelerated volume inside the futures contract, and you broke above that uptrend, that downtrend channel there. What did the Dow do? It stayed up above it right into the July 5th time frame when it got up to the 12,917. What did it actually do on Friday? Came back, tested that area, and rejected it. What did it do this morning? Came back and tested that trend line as well. That's another place where you're going to want to be paying attention to. You get a close below that. What's that going to set up? That's going to set up lower prices. Where's the lower price going to head to in the futures contract? Fairly simple out there. Just go take a look at your 618 retracement. That sets up coming right into 12,341. Makes a lot of sense when you take a look at the candle pattern out there. Take a look at the high of June 6th, folks. You're out at 12,346. So 12,346, 12,341. That's where you would expect to find the next area of support on the Dow if this trend line gets broken, folks. 877-927-6648. We get back, we're going to talk about the new lineup that we have here at TFNN. Today, we're going from now till 6 p.m. live, folks. You got to love it. We'll be right back.
Kate Stalter's exciting newsletter, Low Price Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Just like that, another month has passed and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. Thanks so much and good trading.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
You got the Dow futures off about 40, the S&P off 4, and I talked about change, folks. Beginning today, we go live from 9 till 6. You got to love that. Now, every day, other than Tuesday and Thursday, just for the next couple of weeks, we will be live from 9 to 6 each day. Pretty cool. So today's lineup, just to give you an example, we've got the Money Master Show following this with Tom and myself. Then we go up to Newton, Massachusetts. We go up to Basil Chapman from 11 to 1, as we do on every Monday, Wednesday, and Friday. On Mondays and Wednesdays from 12 to 1, we go up to Larry Pesavento out to Tucson. And then Larry also does a show on Thursdays. Now, 1 to 2, we've added a new show. For those of you that have been listening on the Friday Money Master Show, which became the Nadex Trading Hour, we've got our man Daryl Martin. He begins today from 1 to 2 o'clock, a show called the Diagnostic Trading Hour. So I want to make sure that you are tuning in for that. Then from 2 to 3, we've got David White. Now, David is going to be going 2 to 3, 5 days a week, just on Tuesdays and Thursdays for the next couple of weeks while he gets some things organized. He'll just simply be doing Monday, Wednesday, and Friday. So it's only 2 days a week where we've got, just for a couple weeks, where we have just a little bit of a replay of one of our shows. And then from 3 to 4 each day, 5 days a week now, Ken Shreve being the warm-up band for the Tom O'Brien Show from 4 to 6, folks. So it's all about change. We like to change around here. We know the markets that we trade change. You should embrace change, folks. It is a beautiful thing out there. Now, you talk about, I was talking a little bit about the tennis tournament over the weekend. Now, the reason why I love sports is that, and one of my favorite analogies, because it works no matter what, is really the analogy of Roger Bannister. Now, most of you or all of you know who Roger Bannister is, right? He was the first guy that broke the 4-minute mile. Now, you got to realize that the 4-minute mile that they've been trying to break, they had been trying to break the 4-minute mile for thousands of years. And if you go take a look at his interviews, you go read any of the books on him, what he will tell you is the way that he broke the 4-minute mile, folks, wasn't because of some surge of energy that he had, wasn't because he had the wind at his back. In fact, it was actually just the opposite. He almost didn't race that day because of the headwind that he actually had. It wasn't because of some type of new super drug or steroid or something that was out there. What it was, folks, was he ran that race in his mind. He absolutely visualized it. Now, for thousands of years, nobody had broken the 4-minute mile. Once he did it, it didn't take long. I mean, we're talking within like a week or two for the next guy to break the 4-minute mile. And then the next guy. Why? Because of the power of visualization. So when you take a look at the tennis tournament that was going on, Wimbledon tennis tournament this weekend here, in the finals, you had two folks that had more than visualized it. They visualized because they had done it before. And no matter what they had to overcome in order to get back up on the pedestal, in order to be able to get back up into that number one position, in order to win, they were going against folks who didn't really have the full visualization. They wanted it, absolutely, but they didn't have that same power of visualization. Why is it when you visualize it, when you've already done it, you can do it again, folks? Just think of that 4-minute mile out there and think of how you can apply that in your life. Whatever it is you want in your life, folks, you absolutely can have it, but you won't get it without visualization. It's not going to be just delivered to you on a silver platter. You got to go out there and earn it, and when you do earn it, folks, it is a beautiful thing. So we were taking a look at the futures markets out here, taking a look at change, a little bit of everything. When we left off, we were looking at the Dow futures. Now, let's go switch over to one of the indexes out here. Let's go switch over to the New York Stock Exchange. We take a look at the New York Stock Exchange, take a look at exactly what happened on Friday. What you are going to see is price came right down into the low of June 29th. That low out there, 77.30.02. You actually on Friday, you gapped down, and when you gapped down, you actually also went to a low of 77.22.97, but you closed at 77.56.62. You talk about another line being drawn in the sand. We were taking a look at the ES Mini. We were taking a look at that. Maybe many of you don't have, that chart on your screen. There are places where you can access that. One of those places, if you want to be able to take a look at an ES Mini chart with a free data feed, is going to be the Nadex platform. So you can do that. You go to the homepage of TFNN.com, click on the Nadex trading platform, folks, and you can have a free trading account in about 2 minutes time frame. But if you take a look at the New York Stock Exchange, the other line that's drawn in the sand here happens to be this gap up. One of the largest that I've been able to identify. The data that I had on my charts only went back to 2004. I wasn't able to really download the history. I certainly could have. But this gap right here, folks, it's huge, it's big, it's very important. So the line has been drawn in the sand. You get inside that gap, which eventually it will. You get inside that gap today, then it is setting up lower prices. But you can see you have this wide gap out here, folks. That is called wide price spread. Even though you've got a gap, that is wide price spread. All you have to do is visualize it. 877-927-6648. You're going to have Amerigroup, AGP pop up this morning, WellCare pop up, FX Alliance pop up, Bridgeport on the way down, Apple trading a little bit lower right now. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. You got the Dow down 12 points. S&P totally flat right now. Composite up 2 points. Small caps flat as well. Microsoft down 10 cents. Intel off 2 pennies. Google up $2. Apple up $3 and change. If we take a look at what's popping, what is dropping on a buyout, I believe there was a tender offer this morning by WellPoint, Mirror Group, AGP. If you're holding that, you got a nice 37%, 38% pop right now, up $24, trading out at the $88 and change price point. WellCare also popping up nicely this morning, up 13%. WCG is the ticker symbol out there. You've got FX Alliance, FX here. Let's see, did they have an earnings release? This is the beginning of earnings season being kicked off by Alcoa after the bell today. So you've got Thomson Reuters agrees to buy FX Alliance out there. So they closed, they're up 39%. Right now trading out at $21. You know, I've had people call into the show, and it was absolutely fantastic to be able to do a number of Tom shows over the last couple of weeks, and people taking a look at some stock charts, which absolutely did show perhaps some short setups, but on stocks that were maybe in the 10, 11, 12, 15, even $20 range. And I always caution people, don't short a stock in that range. Why? Because those stocks, you know, a buyout is going to, your only potential, your real potential is on a $20 stock is for it to go to zero. Well, we know that that's not going to happen. So when you start taking a look at your reward to risk, and your risk is what you really want to be able to focus on, start looking at stocks that are 50, 60, 70, 100. Those three numeric numbers, folks, that is really what you want to be paying attention to out there when you're taking a look at shorting stocks. Why? Because you can come in, you got companies, corporations that are flush with cash. You know that the economy is right now in a lull, right? You've got, in fact, you've had many people before they've released earnings, revamp their guidance, guide a little bit lower. Maybe that means they're going to get a little bit of pop out there because memories are short out there. But the whole point is that when you run a publicly held company, it's your responsibility as a CEO to find ways to be able to grow the top line and the bottom line. Well, when you're flush with cash and your market share, you have you've maximized that to a certain extent. Of course, you never really maximize your market share. There's always ways to grow out there. There's three ways to always grow any business, folks. But one of the easiest ways is through buyouts. That's what we see happening going on here. And so you want to be careful on those low-price stocks out there. Not that a high-price stock can also have a buyout, but when you're taking a look at shorts, make sure the more expensive the stock, the better off you are taking a short position out there. If we take a look at what is dropping to the downside, you've got Bridgeport Education, BPI. They're down about 31%. Now, I don't see any news behind it, but we're going to take a look at that stock, and I'm sure when we look at it, we're going to find some type of high volume area where it has dropped down to 31% down this morning. That's off $6. LinkedIn right behind them, off $3.80, down 3.5%. Visa next in line, off 2 3/10%. That's off almost $3. Luminex Corp, LMNX off 9%. Varian Medical Systems, VAR, off 3%, Solar Winds, SWI. So a couple of these names that are kind of in the upper tier inside the IBD getting a little bit hit this morning. Now, Solar Winds only down 3.8%. That's off $1.60. We'll take a look at that. IBM trading lower, off $1. That is what is dragging the Dow down. The Dow down 19 points right now. What I do have up on my screen here, I've got the King dollar. And because the King is back in the building, folks, King's going to be with us here in about 20 minutes or so. When we take a look at King dollar, folks, we're going back to the swing point high of August 27, 2010. That high out there, $83.64. That area was tackled on June 1st. June 1st, you actually had the U.S. dollar index get up to 83.67. Got up over and said nope, and actually did a little bit of a pullback, pulling back into the June 22nd area when you had the dollar index trading down to 81.39. What did you do in overnight trading here in the U.S. dollar index? You got up to 83.63 instead of 83.64. Is it building cause, folks, to actually punch up and get over it? Or is really what it's doing here, it's making a triple top? When was the last time that the U.S. dollar made a triple top? I am glad that you asked me that question out here. If we go take a look at it, you go back into this time frame here, going back to November 2008, when you had a high of 89.25. Then you went and tested that back in March of 09, folks. March of 09 in the $89 price range. And then again, as the triple top, you went back into the June 11, 2010 at the 89.10 area. Now, here's the key thing, and why this is really, perhaps in my opinion, one of the most important charts to watch out here is this. You can watch this, or you can watch the euro. But this one here probably says it all. Why? Because if this is not a triple top in place, if in fact the U.S. dollar index stopping 1 penny before that high out there is actually just going to be building cause, maybe it's going to pull back and build cause to actually catapult it, then the next area where that's going to trade up to, folks, is that swing point. There are no other swing points. Again, we're looking at a weekly chart here, but there is no other resistance on the way up when you take a look at swing points on the U.S. dollar index. That says that the U.S. dollar index would be getting up into the $89 area. I suspect that's where it wants to go. Don't know whether it's going to do it this time, but what does that set up? Last time you had the U.S. dollar index trading up there, folks, you had a triple top, one of those being March of 2009. So you want to talk about being able to put some pressure on the U.S. markets. This chart here, in my opinion, I would be paying attention to this one as much as anything out there. Let's go take a look at some of these stocks here that are popping and dropping and see where they are trading at. Let's close all these windows here, and let's go ahead and let's first pull up the one that was dropping the biggest, Bridgeport Education Inc., BPI is the ticker symbol. BPI, I think that was one of the first accounting software packages back in the old Apple II days. In fact, I'm certain of it. Was one of the first accounting applications out there. I remember buying it. I remember teaching people how to use that software application. So if we do take a look at BPI, folks, coming down this morning with volume, already 798,000 shares in only 11 minutes of trading, coming all the way back down into a breakout. This breakout that we're looking at goes back to November 2010, only 2.4 million shares down there, so it's absolutely going to bust through that. We'll take a look at AB equals CD down patterns there. And if you can take a look at also just simply along this line here, if you take a look at my cursor, where I'm at is on October 4th, 2011. So many things coming down to the October 4th, 2011 time frame. That low of 1601 out there, you can see if you go over to the left, you also can see the price point of that area on April the 13th, as well as April 13th, 2011, as well as the area of January in 2011. Let's go ahead and put this in. So this is an IPO, folks, going all the way back here. Looks like this came on board in April of 09. The low on that, 975, the high of 1168. Looks to me like it wants to get back into that area. Let's put this on a weekly chart to see what else we might see out there. That is a high volume low that has not been tested. So that is where BPI, which is Bridgepoint Education, is headed back to. The high out there, 1262 on the weekly basis. If you take a look at the AB equals CD down pattern, and on the weekly basis, let's see here at the B point, you've got 2.7 million shares. Well, we know that today it's already done 837,000 shares. It's trading below that. And below that, what I mean by, folks, is a price below 1601. You're trading 1511. So it's going to take out the weekly B point on volume. If we take a look at what the A to B equals CD down looks like on Bridgepoint, what that actually sets up is moving down to a price of the 1266. 1266 as a 1-to-1 A to B equals CD, folks. Remember we said the high of April 2009, 1262. You got to love it. That is where that puppy is headed to. Let's go take a look at MasterCard. MasterCard having a little bit of a flat tire here. MA is the ticker symbol. They are trading down $17 right now. Of course, that keeps it at $424. But you do have this gapping down this morning. Let's take a look at volume here on MasterCard. That volume right now so far in the first 13 minutes of trading, 135,000 shares. It's coming into the swing point. Most recent swing point of June 28th, that had 962,000 shares out there. So if we take a look at MasterCard, what sticks out here at MasterCard where you should find some kind of support is February 2nd. That high, 384.25. You're trading at 423.78 right now. It is possible, as we take a look at a retracement off of the high that was established on May 1st. So the high is $466.98, makes a low coming into the June 4th area where our markets, made their last reversal. That low out there, 390.10. And what MasterCard does is a little bit more than a 0.618 retracement. So it is possible that what MasterCard has unfolding right in front of our eyes is an A to B equals CD down. What does that A to B equals CD down look like here in MasterCard? What would be the price projections? You'd look at 388.08 as being the A to B equals CD. What do you have at 388.08? You've got the gap up from February 12th, 2012, February 2nd, 2012. That low is 367.16. 367.16, 388.08. You've got to love that. And that's the last area where you have volume, 3.5 million shares. Now, in order for that to occur, if MasterCard continues to move down, it's going to need to break the B point. Looks like that B point is June 4th. That low, 390.10, 966,000 shares. So far today, 157,000 shares in 15 minutes of time. If we go take a look at LinkedIn, let's go look at LinkedIn out here. LNKD is the ticker symbol. LinkedIn trading out at 105 right now. And if we take a look at volume out here, the stock hasn't really, I'm going to go ahead and get rid of. Now, LinkedIn here, what I will, let's go ahead and take a look at this stuff here. Let's first take a look at what LinkedIn has done. LinkedIn made a 1-to-1 A to B equals CD pattern. It does that, and I'm going to just simply use here as the A point. I'm using the December 22nd low, $60.25. That's your A point. Your B point is when LinkedIn moves up into the February 22nd time frame, gets up to 91.22. Does a pullback, only a 0.382 retracement. Suggests that LinkedIn wanted to go not to 120, but more to the 130 price point. Of course, it gets up to 120, almost makes an island reversal candle, which would have been spelling death for LinkedIn here for a while. But luckily for LinkedIn, on the next trading session, it was not a island reversal. It would have been like a doji island reversal almost. However, that's not what occurred here. You do a 1-to-1 A to B equals CD. It's now pulling back. It made a 1-to-1 A to B equals CD on the way down, or maybe a little bit more than that. Let's take a look at that ABCD down. That's at the May 4th high at 120.63. The B point is down at May 8th. The C point is up at May the 9th. It does a 1 to 1.272 A to B equals CD. That's your June 4th swing point. That June 4th swing point here has only 3.9 million shares. So don't know what's behind LinkedIn. Still, the chart looks it's damaged a bit. So the damage on LinkedIn comes back to May 18th. On May 18th, you had some institutional selling for sure. What you do like about this, it does have somewhat of a high volume high. It's got pretty decent volume up at that May 4th high, 10 million shares. What you don't like seeing is that on May 18th, you had 12 million shares on the way down. Good support on LinkedIn happens to be here at the 91.20 area. That is the February 10th high. That's also where you had the swing point from June the 5th. To me, that's where, if you're looking at maybe taking a position in LinkedIn, that's the area where you're going to want to pay attention to and see what happens as you come back into that June 5th area, as well as coming back into the February 10th area. Let's go take a look at Mercado Libre, MELI. So all of these are stocks or equities, I believe, that are still in the IBD list here. So you got Mercado Libre down 4.6%. That's off $3 this morning. Let's see what kind of volume we have behind this move. Mercado Libre giving you the indication where you saw the institutional selling. You saw that on May 9th. So what Mercado Libre is trying to do is to make an A to B equals CD down, and that one is not going to be pretty. That A to B equals CD down, and especially not pretty because the B point on this does not have much in the way of volume, 549,000 shares. Let's see, that low is 66.57, and that is, 65.81. Let me make sure here, 65.57. That B point is June 14th out there and only has 549,000 shares. As I said, today you've done 118,000 shares in only 18 minutes of trading out here. So Mercado Libre having some additional problems. If we take a look at the most conservative A to B equals CD down, what we would be looking for as a price projection on Mercado Libre gets you back to 45 buckaroonies, and that's going to take you all the way back into May 6th, 2010. And so be careful if you are in Mercado Libre, because you had the initial indication that institutions were unloading the stock on May the 9th out there, and Mercado Libre did a nice bounce, got up into July 5th, got up into the high of 80.75. Couldn't quite get to the top of that gap, which was 81.98. Be careful if you are in that stock, folks. 877-927-6648. Dow off 50 points. S&P's off 4. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. Got the Dow off 57 points right now. S&P's off 5. Composite down 9. You've got the NDX off 0.2% down 6 points. The New York Stock Exchange, though, 77.14. It is inside that gap as we speak here right now. So that's our first signal here on the continued selling pressure in the markets as we took a look at that before the break. Now, again, it is all about change here at TFNN.com. And so following this show, you've got Tom and I doing the Money Master Show, then Basil Chapman from 11 to 12, Larry Pesavento from 12 to 1, from 1 to 2, a new show, Diagnostic Trading Hour, with our man Daryl Martin. Many of you may be familiar with Daryl. He has he's been providing information to us on the Nadex trading platform on Fridays when we do the Nadex trading hour. Then from 2 to 3, 2 to 3 Monday, Wednesday, and Friday for the next couple weeks. David White, the Power Trading Hour, has moved to a new time slot. And then after that, after David gets a few things situated, he'll be going 5 days a week from 2 to 3. 3 to 4, the Ken Shreve Band as a warm-up band for the Tom O'Brien Show from 4 to 6. So we've got programming, folks, from 9 to 6. Monday through Friday. That is a beautiful thing. If we take a look at gold out here right now, gold trading up $7.15 out at $15.8630. What did gold do on Friday? Gold coming back to the sweet 618 area. Now it was doing it on Friday with some wide price spread. This morning got back in a test of that area. That area being 1577. The sweet 618 spot that we're talking about is off of the low on June 28th. That low out there being 1547.60. The high that was put in being at 1625.70. That was on July 3rd out there. So if you just simply go from low to high, what you'll find is that the sweet 618 area is 1577. That so far has acted as a strong support in gold. If gold just kind of meanders in this area here with some small-bodied bars, then you could look at gold moving up at least and trying to test that 200-day exponential moving average. Right now, that price point is at 1630. If you take a look at just a 1-to-1 A to B equals CD out there, if that's what it's setting up here, 1-to-1 A to B equals CD would actually take up to the 1654 level. Look for the 1564 to be your next area of support on gold. That is the 0.786 area. If we take a look at silver, hi-ho silver, what is silver doing? Same thing. Silver having a strong day today, up 1 0.6%, up 44 ticks, trading out at 27.36 right now. So if we go from the same low on silver, June 28th, out there at 26.10, and you go up to the high at 28.44, put it on July 3rd, you simply go from low to high. What you will see is silver came back to that 0.618 area. We know 0.618, 0.786, those are areas where people get off the elevator, whether you're long or short, depending on which direction the market here is trading. Silver also, what it is attempting to do today, if you take a look at this downtrend channel that silver has been in, and silver has been in a longer-term bearish mode, gave us that signal here when the 50-day crossed the 200-day back in November, the middle of November 2011. So right now you've got silver trying to break out of that downtrend channel. What's the upside potential on silver? Well, first, I would say what has been holding it in place has been the 50-day exponential moving average. Right now, that price point is at about $28.58 out there. That would be on silver. Where's the A to B equals CD take you up to? If that is what is underway, A to B equals CD on silver, the 1-to-1 would be up at the 29.22 level. So again, folks, stay tuned. Tom and I will be up next. It'll be great to be back together with Tom. And folks, remember this. You've got an amazing power within yourself. That power, it's so strong, folks, it'll bring about miraculous outcomes. You can cure incurable diseases, but mostly, folks, you can be a fantastic, outstanding, incredible Money Master. Stay tuned. The Money Master Show is up next. Take care, folks.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa